Well, on Friday, we saw a cattle on feed report come out. We're going to discuss that and much more. Joining us now, he is the senior animal protein analyst with RaboResearch, RaboAg. Lance Zimmerman joins us here today on the show. Lance, good to catch up with you, sir. How are you?
Good to catch up with you, Jesse. I'm doing well. We're finally getting rain in Northeast Kansas, so attitude should be a little bit more positive here, hopefully over the next several days.
I know I've seen quite a few videos and pictures on social media, some of those field fires and more, just with how
Uh,
dry it has been. I know folks in your neck of the woods, Kansas, Nebraska, et cetera, parts of the plains, really been feeling this drought here the last several months. And I know that's kind of parlayed itself into this cattle market as well, Lance. Just thinking about the impact on our ranchers and feedlot country. So definitely a lot of concerns there for sure. Um,
yeah,
yeah, I want to talk about this cattle on feed report, though. Top of mind to start. Cattle on feed down 1%, according to the report on Friday. As you take a look at this report, it felt fairly neutral to even maybe friendly. What are your thoughts with that cattle on feed report, Lance?
no, I think that summarizes it really well. I mean, you look at the pre-report expectations, and in terms of those pre-report analyst estimates and where the report fell out, you don't get much closer to being on target with expectations than this most recent report did. I mean, almost every estimate, um, at least on an average basis, was within a tenth of a point to three tenths of a percentage point to where the USDA numbers ended up being printed. What's unique about it, Jesse, is I think the one number in pre-report estimates that had a pretty big range around it was the placements number, right? And when you
Mhm.
looked at those pre-report estimates, you saw numbers anywhere from down 1% to down 8%, and we fell basically down 4. And so you hit the nail on the head in terms of, kind of neutral to maybe slightly bullish if you have a longer term view. The one thing that I think is kind of interesting is most folks kind of shrug their shoulders relative to that September placement decline. But historically speaking, I think it is interesting with that 5% year over year decline in September placements that produced a month over month decline from August to September. Seasonally, if your listeners remember, placements tend to increase all the way through October as we wean more of that fall calf crop. Uh, to have a decline from August to September is rare. That's only happened. The last time that happened was in 2006 from August to September.
Mhm.
2006, another drought period. But to me, that's a pretty significantly, it's a pretty seasonally significant pullback.
Well, and thinking as well with the drought issues and how that plays in and looking at those placements. And we've been hearing, I feel like for months, people have been talking about this cattle herd's going to shrink. This cattle herd's going to shrink. Do you think this cattle on feed report is maybe a sign of that trend finally starting to happen, Lance?
I do, Jesse. I mean, I think one of the things that the last drought taught us, 11, 12, 13, is we won't run out of cattle. But I think the trend should continue to work in our favor. That if we believe what the government's reported in previous cattle inventory reports and previous cattle on feed reports, the trend should work itself lower. One of the things that's been I think maybe frustrating for some producers to continue to see relatively strong placement numbers through the first 9 months of the year is not realizing just how significant heifers have been in some of these placement totals here lately. With the cattle on feed report that just came out, we get a quarterly snapshot of steers and heifers on feed. And basically, from a flat numbers standpoint, when you compare this October 1 heifer on feed number to all other Octobers, this was the largest volume of heifers ever on feed, 4.6 million head. When you look at it in terms of the percent, it was the largest since October 2002. So you bring that many heifers into the equation, it kind of changes expectations when you think about placements. And so as we go forward, especially if we get into maybe a year from now and some of these long run weather patterns change and we get to a point where we feel more confident that the drought is over and we start pulling back on those heifers and keeping them in ranches, that's when you'll start getting those really big placement declines, right? 10% plus declines year over year. We're not there yet. I think as we navigate through the rest of this fall and perhaps into the early parts of winter, we'll be talking about probably declines around 5%. Where we could see some bigger declines is March, April, May, because right now we're placing calves on feed that normally would go to wheat pasture. Well, those wheat pasture placements aren't going to be there this year. There's not a wheat pasture home for a lot of these cattle. They're having to go to feed yards. And so as we think ahead, March, April, and May are typically when we pull those cattle off of wheat, send them into feed yards. That's when I anticipate the next really big year over year decline in some of those numbers. And then the next big surge would come as we rebuild those cow herds.
Well, Lance, a two-part thought here on my end as well. We're looking at these numbers on the cattle on feed report. We're seeing really strong prices on the future side, prices that are as high as, 6, 7 years. We're also seeing very strong cash numbers as well. And I think second part of that, I'm hearing a lot of, strong cash numbers in northern feedlots as well, Lance. So what are your thoughts just both on the future side and the cash side of cattle trade right now?
Yeah, I think as we look at what's going on in the market, the futures market has obviously showed quite a bit of strength here over the last 2 weeks. And I think a lot of that is the market gaining some confidence as the beef market finally got a bid underneath it. If you look at where that break was in the box beef market, prices kind of bottomed around the 10th of October. And since then, we've added $7 to $8 on a cutout basis to the cutout. And we've done it in a way that's a little bit unconventional. We've done it through mostly appreciation in chuck value cuts. And so, as we think about that, I think the market gained some confidence that, hey, maybe this demand situation, short term's not as dire as we thought. Also, the market's recognizing what we're all seeing in the countryside, and that while our numbers are only down about 1% on total cattle on feed, uh, the number and type of cattle we have aren't as high a quality right now. We're feeding less tallow in these rations. These cattle have less days of age on them in total, even as days on feed remain the same. And so, what we're seeing is a market that's been willing to bid up the value for prime, upper two-thirds choice type cattle in the marketplace. What that's done is kind of a long way around a short thought. It's buoyed the cash market because a rising tide kind of lifts all boats. The Packers having to go out there, having to kill a few more cattle than maybe they would want to if all else was equal to try and get some of those prime and choice cattle around them. Similar to last spring here when we had really good demand for middle meats. You have the Packer chasing grade a little bit. And so the North is kind of a leader in this market right now because they have the better quality on average, day in and day out in this industry. But it's allowing every region of cattle feeding country to find better support in here. So, yeah, you got cash values, I think, on the 5 area report Friday ending above a buck 50 on a weighted average basis. A huge range around that with the bigger premiums in the North. And I think as we look ahead, the futures market as we look towards the end of the year probably has upside on the spot market contract in that mid 150s area. And then as we get to the new year, I think everybody you talk to, whether it's on the cattle side, whether it's on the packing side, even retail and food service, sits back and says, let's see what demand looks like into the new year, right? Let's see what happens as holiday bills hit, as the Packer doesn't have as many middle meat orders around them that they have to fill for. We could see a little bit of a pullback maybe to start the first quarter. But I think at the end of the day, we still have a seasonal market, and we're going to trend higher from probably that late winter period into the spring. Again, as everybody eyes grilling season and some of those activities around the corner, and supplies will be tighter.
Lance, how about the demand export picture on beef? I've noticed the weekly export sales numbers, they've been pretty consistent week over week, but they don't feel like they're very strong numbers. What are your thoughts on this export demand front right now?
Yeah, I mean, right now, Jesse, I think 2021 and some of the strength that we saw towards the end of the year that year probably gave us a little bit of a, what do I say, a hope that we could just continue to build year over year momentum all the way through, and it's no bad days ahead. The reality is, as we look at it and we look, and I tend to weight my assumptions more on the monthly data because sometimes those weekly numbers can lead us astray. As we look at it, we're still going to end 2022 with an exceptionally good year of exports. I think all of us all along thought that the year over year growth would really start to face some headwinds as we got into this late third quarter, fourth quarter period, just simply because of how good our export volumes were a year ago at this time. And so, if we can keep pace with where we were a year ago, even make some small incremental gains here and there, that's a win as far as I'm concerned, because we made all of our hay from an export perspective earlier in the year. Um, One of the biggest challenges we're going to continue to face relative to our export climate is how price sensitive are our global customers. I think we've learned that in the US, all else equal, the US consumers not as price sensitive to beef as perhaps they were 10, 15, 20 years ago. The idea, the adage, we're expensive, but in the US consumers' minds, we're worth it. Well, does that same adage hold if you're a buyer of US beef from Japan or China or any other country, Korea for that matter? And I think that'll get tougher going forward, especially with the strength of the US dollar. Through the end of the year now, Korea has met their tariff rate quota. And so we're going to be going into that country at a higher price point. Certainly, there's some headwinds there that we have to work through. And at the end of the day, Jesse, all of our growth in exports this year has been big in Southeast Asia, and China being the biggest among them. How does COVID and some of the things going on as they come out and set their policy direction for the next year influence us as well?
Very, very good thoughts there, Lance. Before we wrap it up, anything else we haven't touched on with this cattle market, or anything else in general that you want to mention here today?
Last thing I would kind of mention to folks is as we look ahead to next year, we started the conversation talking about whether maybe it's warranted that we come full circle on that. As we think ahead to next year, a lot of expectations, whether it's coming out of our shop at Rabobank, whether it's other analyst groups or even the government, as we set our projections for next year, a lot of these expectations are weather dependent. And as we look across the countryside, if we can get moisture into winter and spring, that'll change these outlooks significantly. I wish blessings upon your listeners that they can get the moisture they need, have a great calving season, and we can look ahead with more optimism into next year. But that's 100%, I think, the focus for all of us right now. Get this countryside healed up.
Well, I couldn't agree more with you on that. I know we'll stay close with you and get you back on the show again real soon with that. Lance Zimmerman with Rabobank, RaboAg. Appreciate the time, sir. Have a good one. We'll talk to you again real soon.
Thanks, Jesse. Same to you.